points. O'Donnell and Steve Moore will go head-to-head. We are money, politics, and stocks. That's our beat. Fasten your seatbelts, everybody. Kudlow and Company begins right now. Good evening, everyone. I'm Larry Kudlow. Welcome back to Kudlow and Company. We aim to be right on America, right on business, and right on the money. And yes, we still believe that free market capitalism is the best path to prosperity. On this evening's program, stocks fended off AMBAC, and they finished 41 points higher on the Dow, closing at 12,255. Once again, commodities led the way as the basic materials index was up 2.4%, energy up 1.8%, oil closed over $104 a barrel. That is a new record. Gold up $22 to $988. That is another new record. Additional commodity records today: silver, home heating oil, natural gas, copper, and cotton. And yes, the DXY dollar index dropped to a new record low. McCain wins big. Hill is still in the race. The economy looks flat. And here's Jack Welch on our program last night. He is talking about the stock market. Take a look.
A real component of this Wall Street slowdown, aside from credit and the slowdown in the market, is this concern about this next election and going to these policies. These policies are really anti-business.
All right, he was talking about Obama's policies at that moment. Let's dig in. We have Don Luskin of Trend Macro, Dougie Cass of Seabreeze Partners, Fritz Meyer of AIM Investments, John Brown, former member of Parliament, and Kevin Kerr, president of Kerr Trading and editor of Resource Trader Alert. Hello, gentlemen. Thank you for coming back on the show. Don Luskin, let me just get a quick take on this. McCain wins big. Obama in the back seat for the moment. Mr. Welch was giving us a riff. He doesn't like the Democrats' policies on trade or taxes or businesses. Has that been a factor in this weak market year to date?
Probably it's boiling away in the background. It's not a good thing. I think that it's pretty clear that just the whole credit crisis and the possible impending recession has been what the market's really been thinking about. But, you know, going along in the background, just every day you hear these increasingly radicalized programs where every day it's Hillary Clinton and Barack Obama playing, can you top this? Who can be the bigger protectionist? Who can throw more bones to unions and unemployed people? It's pretty scary. But, Larry, the great news is, I'm sure you saw McCain last night. It's starting to come together. He's starting to make the right kind of courageous statements about free trade, about low taxes, about growth, about self-reliance. It's just turning into a very Reagan-esque message. So whatever happens in November, the voters are going to have a clear choice. John McCain is doing a great job.
John Brown, you're Circlips Now guy, and I want to ask you about the Jack Welch stock market comment, and I want to ask you what Don Luskin said. McCain did give a good speech last night, or at least I thought so. His top economic advisor, Phil Gramm, was on this program and did lay out spending cuts, tax reform, free trade, things of that sort. John Brown, what do you think of this? How does the stock market digest, ingest, and consolidate these political races?
Well, I think at the moment I agree a lot with what Don just said, but I think basically the two Democrat contenders would be a disaster economically. As for the Republicans, I think my old friend and former military commander General Al Haig said to me last week, you know, John, the trouble is that the Republican Party has been run by non-Republicans for far too long. Now that, I think, is changing. And I think if Don is right, and Mr. McCain is changing his attitude to a more Republican attitude than the one we've seen now, that spells a good message. And that's why I think there's this volatility, partly because it's on the one hand Democrat, and they're now tearing themselves apart. Now we've got a Republican single candidate, which is going to benefit him, I think, being a single candidate in the run-up to the election. The question is, who would he most easily beat? Obama, whom a lot of Republicans are favorable to even, or Hillary,
well, what's
that a lot of Republicans hate?
In one word, answer your question. Who would he more easily beat?
I think Hillary.
You think he'd more easily beat Hillary? Kevin Kerr, let me get to you.
Yes, because a lot of people hate her.
All right, well, there you have it. Kevin Kerr, politics and the stock market. You've heard some of the views here. Where do you come out?
Well, clearly, I like what McCain's saying. I agree with those comments. He's starting to sound more Reagan-esque. I hope that continues. You know, I was hoping this would get shaken out, either Obama or Hillary. Unfortunately, it seems like this is going to continue on.
Yeah, but don't you think that's fun?
Well, I
mean,
think
wouldn't it be
it's certainly
great
going to be
have
more
them just slug
entertaining
it
than the
out?
other way.
If they're,
Absolutely.
you know, they're just going at each other for the next 6 months. What do you make of that?
Well, I do hope that we get some substantive answers on energy policy going forward from some of these candidates. I mean, someone, please come out with an energy policy going forward to get us out of this mess, or at least give us some sensible solutions that will help bring these oil prices down. I mean, this is killing the economy. Clearly, we need to do something that's going to make sense, not just spout about corn-based ethanol and other things. We need a serious energy policy in this country.
Dougie Cass, I'm going to spare you the politics. Let's move on. I'm going to spare you, unless you really want to blurt out something.
I have a comment.
Go ahead.
I have one comment on that. Go ahead. I think that the consequences of Senator Clinton's wins last night in Ohio and Texas are important, because the uglier things get between Obama and Clinton in the next 2 or 3 months, and they will get ugly, will probably serve to alienate the electorate and increase the odds of a McCain win, which is bullish for stocks. So while my investment mosaic and the determinant of future stock prices is a function of my view of the business cycle and corporate profits, this is an added plus for the market.
All right, that's interesting. I wasn't sure that you would go there. Dougie, give me a quick primer on AMBAC, and then I've got to get to commodities, because I still think that's the headline story today. But
Sure.
You don't like the
Sure.
AMBAC deal, as I understand it. You don't like it, is that right?
No, may the farce be with you. I think what the AMBAC deal is doing is basically perpetuating the farce of its AAA rating. I mean, I compared recently in an email to you the financial condition of Pfizer, which was downgraded from AAA to AA by Moody's and S&P in December of 2007. And there's no comparison. It's amazing that it took 3 weeks for them to raise half of what they said they would raise, and with minimal participation by the banks, who are the most exposed.
Fritz Meyer, let me go to you.
I'm short AMBAC still.
All right. Well, thank you for sharing that. Fritz Meyer, let me ask you, I don't really think it's a big deal. I think it's kind of an insider story. And Fritz, there's a great story in the front of Investors Business Daily. I want to ask you about it. It basically says all these banks and financial institutions heavily writing down bad assets, quote unquote, subprime type assets. They're writing them down too far, Fritz, because of Sarbanes-Oxley, because auditors are standing over the shoulders of CEOs who are worried they're going to go to jail for the next 30 years. And that the whole subprime problem, CDOs, CLOs, you name it, Fritz, is just ain't nearly as bad as it's been made out to be. What do you make of that kind of thinking, that kind of story?
Well, I think probably the notion that they're taking them down too far has some validity because of Sarbanes-Oxley, perhaps. Also, the fact that a number of the major institutions have new CEOs, and I think they'd be inclined and motivated to take it as far down as they can. And also, they're using these derivative indexes to help them price these securities, which I think aren't extremely liquid in themselves, and
hedge
probably
funds
are skewed to the downside.
Hedge funds are pushing them around. They're using them in the hedge.
Yeah.
So they really don't tell you much about loan value, do they, anymore?
Yeah. No, and also if you look at the actual calculation with respect to subprime ARMs and apply some probabilities as to what actually ultimately gets written off, I think by that calculation too is sort of another way of triangulating to get at the answer to this problem. I think probably in that case too, the mortgage-backed bonds have been taken down too far in many cases.
Don Luskin, do you agree with Dougie Cass about shorting AMBAC? Do you think AMBAC is an important story, or do you think certain networks are obsessing about it?
Well, it's probably, networks are definitely obsessing about that and about a dozen other things that aren't worth it. But, you know, I do disagree with Doug on one fundamental thing. I don't think this continues the farce about the AAA rating. In fact, I think that's what went wrong today. That as soon as they came out with their plan, the ratings agencies were on the tape 30 seconds later saying, it's not good enough. We can't guarantee that you're going to hold your ratings. That's what everybody wants. Look, let's face it. They need to hold their ratings so that the stuff that they've insured doesn't get downgraded when AMBAC gets downgraded. That's what this whole thing is about. That's the only reason anybody cares about this. But look, let's not be too flippant about saying, well, they're too financially weak to raise any money. They raised half of what they were supposed to raise and all that jazz. They are very conflicted as a company. Their existing shareholders would probably be better off if they didn't raise any money at all. If they just gradually and gracefully went out of business and just ran off the existing business. Right now, they're accepting a tremendous amount of dilution, basically so that third parties, not shareholders, third parties, clients, communities, regulators, can keep their dignity by keeping these securities they own from being devalued when the ratings get lowered. So there's a real agency problem here.
Go ahead, Doug.
Don, they basically said that they basically said that they were going to exercise a moratorium for at least 6 months, you know, on any of the toxic stuff. So they're basically saying they're going to let the business run off.
So what does that mean?
Well, wait a second. Just saying you're going to take a time out for 6 months isn't saying you're going to go into runoff mode. Because if you're going to go into runoff mode, what you want to do is you want to maximize what the existing shareholders hope to get in that mode. You don't want to dilute them by a factor of, you know, about 100%. You know, we're talking about $1 billion company that's raising $1 billion to $1.5 billion, so that's greater than 100% dilution.
Correct.
Why do you want to do that?
You're correct.
All right, let's move on. Kevin Kerr, I don't think the commodity rally will end, maybe not in my lifetime, unless and until the U.S. government finally defends the U.S. dollar. I have changed my thinking on this. I am very worried about inflation leaking through from this global commodity rally through the weak dollar. Nobody wants to stand up for it. As a sidebar, I'm also concerned it's affecting American prestige at home and overseas. A lot of our allies think America's in decline because the dollar's in decline. Now, you have been a commodity bull. First question is, how long are these commodities going to keep rallying in your current judgment?
Larry, you're going to live a long time. I know it.
Yeah.
No, bottom line is the weaker dollar is certainly a significant part of these commodity increases. But as you and I have talked about for almost 3 years now, I was talking to you when gold was below 600, saying we'd be here at 1,000. Bottom line is, adjusted for inflation, we're not even halfway there in some of these commodities. The worldwide demand is huge, but the bottom line, if the Fed doesn't step in and step up, stop cutting rates, start supporting the dollar, you're going to see these commodities climb exponentially as the dollar weakens.
What's exponentially? Give me an exponential number.
Exponential number, you're looking at $2,000, you're looking at crude at $250. You're looking at countries starting to think, well, maybe we should peg from the dollar, maybe we should no longer price oil in dollars seriously, not on a joking political front, but on a serious basis. This isn't worth anything anymore.
So this is like the tech stocks of the 90s or the financial stocks. The share of the S&P 500 absorbed by basic materials and energy is just going to keep rising. Is that right?
Yeah, absolutely.
And do you stay there? Do you buy them, Kevin, or do you take the individual commodities? I mean, I've never seen a driver like this. This looks to me, this is really more robust. This is more pronounced than it was in the 70s.
Think about this. The Street Tracks Gold ETF has more gold in it than many central banks have. If the central banks start buying gold, you can see that price climb overnight. The bottom line is a lot of these commodities are still undervalued. Even though they're on record highs, they've been underpriced for years. So there is a lot of upside potential there.
Hey, and you know what? Gold just had a 10% rally after the IMF said it was going to sell gold.
That's right.
How do I like that?
No, I know. It's an incredible thing. Bernanke goes up on the Hill last week and says basically, he talks about the dollar for a moment, but he says, yeah, it's about our 19th priority. And let me ask Fritz. Fritz, to me, this is the new big theme. And unless and until the United States decides to defend its own currency and restore some prestige and restore some credibility, then Kevin Kerr is going to be right and Don Luskin is going to be right. And both of those guys have been right for quite some time.
Well, I think the U.S. dollar probably is pretty close to bottom versus the euro. The current account balance has decisively turned the corner, and purchasing power parity is way out of whack.
What's the current account balance have to do with the dollar?
It has everything to do with the dollar. But let me talk about commodities, or at least give you my view on commodities. I agree with you guys on that in that respect. Last week, the Wall Street Journal ran one of the most important stories I think I've ever seen. Sovereign wealth funds are going to increase from $3 trillion today to $12 trillion in just 7 years. That's a 22% compound annual rate of growth. Today, they only own 1% in commodities, and they want to take that percentage up. Talk about a global savings glut. Talk about a tsunami of petrodollars looking for a home, and they're increasingly going to include commodities in the asset basket. And remember, these markets are relatively small compared to global financial markets. So I'm with you on the commodity story.
Don Luskin, you've been an advocate of buying the commodity stocks. You've been a critic of the Fed for its neglect of the dollar, critic of the Treasury. Is there any evidence at any moment, anything you've heard in recent days or weeks that would change the view? Is there any? I saw a story today that the Europeans would actually defend the dollar, maybe before the Treasury, because the Europeans don't like it, that we may be pricing their exports out of the market. But not a single word, Don. We had the Undersecretary on for International Affairs. He wouldn't even go there. He wouldn't want to get within 25 yards of this dollar question. What's going on? This is damaging American prestige overseas, and I think, Don, now, with this spurt in the last 4 months of inflation, this is the biggest threat to the economy, not the so-called credit crunch.
Well, you're absolutely right. And to answer your question, have I heard anything that's changed my mind? Yes, I have. I've heard a lot just this week that's made me feel even stronger about commodities and inflation. Have you listened to these speeches that Federal Reserve Board Governor Frederick Mishkin has been making?
Right.
Oh, my God. If this guy is actually making monetary policy, then just crawl into your fallout shelter and pull the door over your head and forget about it, because gold's going to 10,000. This guy is absolutely clueless. He thinks the central bank's only responsibility for controlling inflation is to control inflation expectations. Then he goes on to say, well, how do you control inflation expectations? He says, well, you do that by controlling inflation. Wait, let me get this right. You control inflation expectations by controlling inflation, but it's inflation expectations that cause inflation.
This is dog chasing tail. We're going to come right back. When we come back, I'm going to show a chart of the inflation tax on capital gains, which has been bad for stocks. It may be good for commodities, but it ain't good for stocks. Anyway, Kevin Kerr, give me a forecast. How much gold price? Give me the number.
Oh, gold's going to 1,500 minimum, but we may see a shakeout here a little bit, but we're going higher. This is not done yet.
And oil.
Oil, 150, 125 next. We're going to pull back first, so there's plenty of oil right at the moment.
Then that's got to sink the economy, Kevin. We can't. That's just insanity. That's total insanity.
Europe's been living with high oil prices for a long time. We're just getting a taste of it.
You call that living?
All right, Kevin Kerr, we appreciate your inputs very much. Rest of the panel's got a lot more work to do coming up on the program. How damaging would a President Obama be to the U.S. and its reputation abroad? We'll ask former Secretary of State Lawrence Eagleburger and Hillary's budget-busting plan for children. Well, where's that money coming from? I'm afraid to ask. And can John McCain win a recession election? Lawrence O'Donnell and Steve Moore are going to go head-to-head. We're for keeping America great, but you know what? I still believe that means a strong dollar. I'm a Reagan guy. That's my view. Kudlow and Company, straight ahead.